The controversial chief executive of Ecobank Transnational has been ousted by the bank's board. The move ends a 9-month battle over allegations of mismanagement. And with regulators, shareholders, and now the board behind a comprehensive overhaul, what does the future hold for this Pan-African bank? With me now to answer that question is our African affairs writer, William Wallis. William, why is this story so important?
Ecobank is one of the few, if not the only, African companies that has reached this kind of scale in so many markets across the continent. It's now present in 35 countries. And although it was founded 29 years ago, in the last decade it's surged and expanded across this market. So it's become kind of emblematic of a new dynamic type of African business taking advantage of growth on the continent.
And what got you interested in the mismanagement at Ecobank in the first place? Because what your earlier stories triggered the investigation into the bank.
Well, partly because Ecobank has an extremely good reputation, and it's much loved in the continent in a way because it has a mission that's slightly beyond just being a bank. It's a kind of commercial approach to the Pan-African ideal that independence leaders like Kwame Nkrumah had many years ago. So when I got hold of a letter from the Central Bank of Nigeria to the bank suggesting that there had been some mismanagement at the bank and that the chairman had long-standing debts both to Ecobank itself and to other banks in Nigeria, it seemed an important story.
So this was a good outcome at the end because the chief executive was ousted in recent days. What does that mean for good governance in Africa?
Well, one of the big challenges for regulators in the region was actually how to regulate this particular bank, because it's in so many markets. And the Central Bank of Nigeria didn't actually have regulatory oversight of this bank because its holding company is down the coast in Togo. In fact, what happened was the Nigerian Securities and Exchange Commission, which is the capital markets regulator, took control, investigated the initial allegations of the chairman's debts, and then that sprung a whole lot more allegations of mismanagement at the bank. And I think the role that the regulators have played in backing shareholders, backing the whistleblower in this case, has been really important in showing that actually transparency in these markets can actually work.
Tell us a little bit what the actual investigation was about. What were the accusations here, and whether now that this is behind the bank, since this has now been settled, whether the bank can now have a fresh start and what the future holds?
Well, the actual allegations that sprung out of the investigation by the Capital Markets Authority came from the bank's executive director in charge of risk and finance. And she alleged that she'd been pressured to write off long-standing debts owed by the chairman. She said that she'd been pushed to manipulate the results of the bank. She said that she'd been pushed to conspire in selling off bank assets cheaply to a former board member, and a few other allegations, all of which wouldn't necessarily have made a big impact on the bank's balance sheet, but were obviously important in terms of the governance direction that the bank was taking.
And so can the bank now look towards a more stable future?
Well, I think the outcome of the last few weeks, after all these months of paralysis and crisis, has been broadly very positive. You've got shareholders, regulators, and some bits of the bank management all rallied behind a comprehensive overhaul of the bank's governance structures. At the same time, a very divisive CEO has been removed. And very few banks in that region have been put under this kind of scrutiny. So I think we can be very confident that the bank is going to emerge much stronger as a result.
Thank you, William.
Thank you.